Collective research. Active fundamental research in global capital markets. Make informed decisions.
Bill Ackman. William Albert Ackman, born May 11, 1966, is an American billionaire hedge fund manager who is the founder and chief executive officer of Pershing Square Capital Management, a hedge fund management company. His investment approach has made him an activist investor. As of June 2023, Ackman's net worth was estimated at $3.5 billion by Forbes.
In January 2022, Ackman disclosed that Pershing Square acquired a $1.1 billion stake in Netflix. Netflix stock had just experienced a precipitous 30% sell-off after announcement of a disappointing subscriber growth outlook for Q1 2022. In a letter to its investors, Ackman praised Netflix's best-in-class management team and said he long admired Netflix CEO Reed Hastings and the remarkable company he and his team have built.
Bill Ackman sold all 3.1 million shares. Billionaire investor William Ackman liquidated a $1.1 billion bet on Netflix, NFLX, locking in a loss of more than $400 million as the streaming service's stock plunged following news that it lost subscribers for the first time in a decade. Ackman's hedge fund Pershing Square Capital Management made an abrupt U-turn, selling the 3.1 million shares it had bought just 3 months ago as Netflix shares tumbled 35% to $226.19.
Shares have fallen over 60% year-to-date. Back in January, the hedge fund billionaire bought a $1.1 billion stake in Netflix in a bid to capitalize on the streaming giant's falling valuation. The 3.1 million shares acquired implies that the average price was around $354 per share, which means the company's market capitalization had almost been halved since the stock peaked at a 52-week high of $700.99 on the 17th of November. With a $97.02 billion market cap, Netflix shares were down 3.5% on Thursday morning at $218.30. The stock has tumbled over 60% year-to-date.
Reason Bill Ackman sells Netflix. Ackman's decision to exit the world's largest streaming platform came 3 months after he amassed a stake worth $1.1 billion, making his Pershing Square vehicle a top 20 shareholder in Netflix and pledged to focus on the long-term horizon. In a brief statement announcing the move, Ackman said proposed business model changes, including incorporating advertising and going after non-paying customers, made sense but would make the company too unpredictable in the short term. While Netflix's business is fundamentally simple to understand, in light of recent events, we have lost confidence in our ability to predict the company's future prospects with a sufficient degree of certainty, he wrote in a note to Pershing shareholders. He wrote, "Based on management's track record, we would not be surprised to see Netflix continue to be a highly successful company and an excellent investment from its current market value."
Bill Ackman letter to Netflix shareholders. Dear Pershing Square investor, today, we sold our investment in Netflix, which we purchased earlier this year. The loss on our investment reduced the Pershing Square Funds year-to-date returns by 4 percentage points. Reflecting this loss, as of today's close, the Pershing Square Funds are down approximately 2% year-to-date. While we have a high regard for Netflix's management and the remarkable company they have built, in light of the enormous operating leverage inherent in the company's business model, changes in the company's future subscriber growth can have an outsized impact on our estimate of intrinsic value. In our original analysis, we viewed this operating leverage favorably due to our long-term growth expectations for the company. Yesterday, in response to continued disappointing customer subscriber growth, Netflix announced that it would modify its subscription-only model to be more aggressive in going after non-paying customers and to incorporate advertising, an approach that management estimates would take 1 to 2 years to implement. While we believe these business model changes are sensible, it is extremely difficult to predict their impact on the company's long-term subscriber growth, future revenues, operating margins, and capital intensity. We require a high degree of predictability in the businesses in which we invest due to the highly concentrated nature of our portfolio. While Netflix's business is fundamentally simple to understand, in light of recent events, we have lost confidence in our ability to predict the company's future prospects with a sufficient degree of certainty. Based on management's track record, we would not be surprised to see Netflix continue to be a highly successful company and an excellent investment from its current market value. That said, we believe the dispersion of outcomes has widened to a sufficiently large extent that it is challenging for the company to meet our requirements for a core holding. One of our learnings from past mistakes is to act promptly when we discover new information about an investment that is inconsistent with our original thesis. That is why we did so here. We are in the midst of an opportunity-rich environment for Pershing Square due to the dramatic shift in Federal Reserve policy, the highly inflationary environment, geopolitical uncertainty, and the resulting high degree of security price volatility. We therefore expect to find a good use for the Netflix proceeds. Please feel free to contact the investor relations team if you have any questions about the above. If you would like us to research a stock, please tweet at Collective REC or leave a comment here.
Like and subscribe for potential investment ideas. Become a member at www.collective-research.com.
Receive investment ideas before they are published.
Collective research. Active fundamental research in global capital markets. Make informed decisions.